Welcome, listeners, to the Market Momentum Podcast. Today, we're diving deep into the charts and exploring the roller coaster that is the current financial market. Buckle up as we break down key movements, risks, and potential recoveries that could shape your investments. S&P 500 Index. First up, the S&P 500 Index. On the weekly chart, we see a strong recovery after its recent dip, standing tall at 5,455. Volume is ticking up, showing renewed investor interest. However, our MACD 5200 is flashing a bearish divergence. The MACD line is dipping below the signal line, with the histogram in the red, possibly hinting at trouble ahead. But wait, the daily chart tells a different story. The S&P 500 is trying to climb back above 5,442, with the RSI turning upward from oversold territory. This could signal the beginning of a bullish breakout, or it could be just a dead cat bounce. The next few sessions will be crucial. Volatility Index. Now, let's talk about the VIX, or the Volatility Index, the market's fear gauge. The VIX recently spiked to 18.41, but has sharply pulled back to 16.20. This suggests that fear is receding and the market is calming down. However, a low VIX often precedes a storm, so while things look calm now, always be ready for the next spike. Dow Jones Industrial Average. Next, the Dow Jones Industrial Average. On the weekly chart, the Dow is flirting with a crucial resistance at 40,008. It's been a steady climb, but can the bulls push through? The RSI sits at 59.97, neutral territory. However, the MACD is losing momentum, which could signal a reversal if the bears take control. The daily chart shows renewed strength. A strong green candle and a rebounding RSI from 50.37 suggest a potential rally. If the Dow convincingly breaks past 40,000, we could see a bullish trend heading into the latter half of the year. Nasdaq Composite Index. Finally, the Nasdaq Composite Index. On the weekly chart, we see a solid bounce from the lows at 17,192. However, the RSI is still in a bearish zone, and the MACD remains deeply negative, making this a crucial juncture for the Nasdaq. The daily chart shows early signs of recovery. The index is climbing, and the MACD histogram is rising, though still in negative territory. The RSI is creeping up, but remains below 50, indicating a battle between bears and bulls. If the Nasdaq can push through resistance at 17,500, it could spark a tech resurgence. But if it fails, we might see another dip, possibly retesting the lows. Key takeaways and risks. Bullish signs. Short-term recoveries across major indices suggest building confidence. Watch for breakouts in the S&P 500 and Dow as indicators of broader market strength. Bearish risks. MACD indicators are raising red flags on multiple charts, signaling potential downward pressure. A low VIX could be the calm before the storm. Don't get too comfortable. Sector watch. Keep an eye on tech stocks within the Nasdaq. They could be the wild card that either drives the market higher or drags it down. That's all for today's exciting analysis on market momentum. Stay tuned, stay sharp, and remember, in this market, anything can happen. Keep your eyes on the charts, and we'll catch you next time.